Hello everyone, welcome to EduTap and welcome to today's session. So in today's session, we are going to discuss three very important finance current affairs. The first one is regarding the FIU India and the Reserve Bank of India have signed a MOU, the Memorandum of Understanding. Why this MOU has been signed, what are the key ideas that you need to keep in mind. So all of this we are going to discuss in today's session. The second news article is regarding the NaBFID, that is one of the All India Financial Institution has signed MOU with the NDB. Now NDB is related to your BRICS. Okay, so we will discuss about the BRICS also because it becomes important whenever it is in news. Okay, so we will discuss that what is this new development bank and what is this BRICS. Okay, then the third news article is regarding SEBI that has eased the FPI's disclosure norms. So the asset threshold has been doubled. So why it has been done so and what is the implication of this? All of this we are going to discuss in today's session. So these are the three very important news articles that we are going to discuss in today's session, and all these news articles are important from your objective perspective, okay, because direct questions can come from these news articles in your regulatory body examinations. Okay, so I hope I'm clearly audible and visible. So good morning all of you and welcome to the session. Before starting with the three news articles, do subscribe to the YouTube channel of EduTap so that you continue getting these relevant videos, and do join our Telegram channel where you will get the PDF of the session. Okay, and the link for the Telegram channel is provided in the description box below. Usually within 24 hours the PDF is uploaded in the Telegram channel. Okay, so now let's discuss about the first news article, that is FIU India and the Reserve Bank of India have signed the MOU. Now FIU India, it is the Financial Intelligence Unit of India. Okay, like I hope you know that there are different intelligence agencies in our country, there are different intelligence units in our country that looks after or that identifies the problem in the defense areas or that identifies the different things. Okay, so India has different intelligence units for the defense of our country. Now similarly we have a financial intelligence unit also. Why do we want a financial intelligence unit? To identify the problems in the financial transactions, to identify the money laundering that is happening from India to the other countries, or the black money that is going here and there. Okay, so financial intelligence unit of India, this is a very important unit of India, that is a central national agency. So this unit, it is a central national agency that is responsible for receiving, processing, analyzing and disseminating, that is providing the information relating to suspect financial transactions, the susceptible financial transactions, the suspicious financial transactions. Now these are informed to enforcement agencies and foreign financial intelligence units, so that collectively the foreign financial intelligence unit and Indian financial intelligence unit, they can identify the money laundering accounts or the accounts that are doing the money laundering, that are engaging in the black money or that are engaging in the money that is not through the good sources. Okay, so this is the idea that financial intelligence unit, it is a very important unit in our country that identifies and that collects and disseminates the information relating to suspect financial transactions that are related to money laundering or terrorist financing. Let's say from an account the money is going to some terrorist organization. Now directly the money will not be transferred for sure, otherwise it can be easily identified. So there is various accounts through which the money is going here and there, and finally it is reaching to the terrorist organizations. So the financial intelligence unit of India and the financial intelligence unit of the other countries, they identify such accounts that are leading to the terrorist financing also. Okay, so financial intelligence unit, it is very important for collecting and disseminating the information regarding the susceptible financial transactions that happen. Now the FIU India and the RBI, they have signed a MOU to do the coordinated efforts and to provide the coordinated efforts in effective implementation of requirements of Prevention of Money Laundering Act and rules framed thereunder. Okay, so Prevention of Money Laundering Act, this is the 2002 Act. So the Prevention of Money Laundering Act 2002, this act is for prevention of money laundering and to provide for confiscation of property. The property will be confiscated if the property is related to money laundering or if the property is related to the activity of money laundering. So you can understand that the RBI and FIU India, they have signed a MOU so that they can collectively put efforts in the requirements for the Prevention of Money Laundering Act. Now you can understand that RBI is the top authority when we talk about the banking structure, or when we talk about the financial system of our country. So RBI is at the apex of the banking system, right? So RBI also looks after that through the banks, the such transaction should not happen that is related to money laundering. So there are various rules that the RBI has also made for this. So RBI and FIU India now have came together so that they can put the coordinated efforts to further increase the prevention of money laundering. Okay, so the MOU was signed by Sri Vivek Agarwal, the director of the FIU India, and the Sri RLK Rao, executive director of Department of Regulation of RBI. Okay, so the MOU has been signed between the FIU India and Reserve Bank of India, and from both these organizations there were different important members that were present. That is the basic idea. Now, FIU India and the RBI will cooperate with each other in the areas of mutual interest. Okay, that is for boosting the prevention of money laundering and such. Now, how they are going to cooperate, how they are going to coordinate. If you can understand that FIU India and the Reserve Bank of India, if let's say their departments are engaged in transferring the information and analyzing the information, it can be very hectic and the structure might become complicated. So that's why it is said that each party to the MOU, that means FIU India and the Reserve Bank of India, they will appoint a nodal officer and an alternate nodal officer to interact with the other party. Means FIU India will have a nodal officer and alternate nodal officer. RBI will have a nodal officer and alternate nodal officer. They will interact with each other to share the information, to analyze the information and such. Okay. So through the nodal offices, the FIU India and the Reserve Bank of India, they will share the relevant intelligence and information available in their respective databases. That means which accounts are problematic, which accounts are related to the susceptible financial transactions, how much money is being transferred, or according to the database, which person is related to which account and such. Okay, so relevant intelligence and information will be shared. Okay, laying down procedure and manner in which the regulated entities, now under the Reserve Bank of India, the banks are the regulated entities, NBFCs, credit information companies, these are the regulated entities. So they share the share the data with the RBI regarding the susceptible financial transactions, or the susceptible accounts, or the accounts that might be involved in the money laundering, or the accounts that might be involved in the terrorist financing. So now the FIU India and the RBI, they will lay down the proper procedure and manner in which the regulated entities, that is the banks and BFCs, or the reporting entities like these, they report to the FIU India under the PML, that is the Prevention of Money Laundering rules. Okay, so that the money laundering can be prevented or can be reduced to a great extent. Next is conducting. So FIU India and the RBI, they both collectively will conduct the outreach and training for the regulated entities or reporting entities, so that they can undertake the faster and efficient means of identifying the accounts that might be related to the money laundering. Okay, so outreach, training, workshops, or the training programs will be conducted for the regulated entities or reporting entities, so that they can follow the process and they can follow the rules and regulation for sharing the information with the FIU India and for identifying the problematic accounts. Okay, next is upgradation of anti-money laundering or combating financing of terrorism skills in the regulated entities. So what will happen that in the regulated entities like the banks, NBFCs, credit information companies and such, there will be the upgradation of skills that will happen. The skills will be upgraded. The skills will be upgraded in regards to identifying the anti-money in regards to identifying the money laundering and the financing of terrorism accounts. Okay, so upgradation of anti-money laundering and combating the financing of terrorism skills in the regulated entities or reporting entities will be upgraded, and these reporting entities or regulated entities which are regulated by RBI. So banks, NBFCs, they are regulated by RBI. So in these entities, the training will be given and the upgradation of skills will happen, so that they can work in a faster and more efficient manner for anti-money laundering, for fighting against the money laundering, we can say, or for fighting against the terrorist financing, because these both are a very big problem. Okay, many of the events that happen in India, they are linked with the terrorist financing, or they are linked with the financing. Let's say there is some skirmish that is happening. okay, between two groups, or there is the problem that is created between two groups, it is usually said that the problem is initially funded by some other organization, some external organization. So you can understand that if a big trouble is coming in our country, if there is internal problems that are that are initiated, so that internal problem might be initiated with the external funding, just because the other countries or some particular countries do not want to see India getting developed in a faster manner. So they are funding the terrorism in our country, or they are funding the problems in our country, or they are funding the particular groups in our country to create problems. Okay, so it happens that there is a terrorist financing from India to other countries. From India means that some groups in India might be live that are the groups of foreign countries, and from here the funding might be sent, or the funding is coming from outside. Okay, so usually it is the case that the funding might come from outside to create terrorism in India, or there might be some groups, foreign groups in India, some foreign groups that are present in India in sense of the NGOs, that they are running the NGOs, or they are running some good groups in our country. So they are in the pretense that okay, they are the foreign groups that are the NGOs or something, but they are doing the terrorist financing. Okay, so it might be also true. So upgradation of skills will happen in the regulated entities or reporting entities, so that they can have the anti money laundering, or they can fight against the money laundering, or they can fight against the financing of terrorism that is coming to India, or that is sent by these foreign groups from India. Okay, so assessment of money laundering or terror financing risk and vulnerabilities will be identified. So it will be assessed that what are the risk and vulnerabilities that are present in the financial subsectors, that where are we vulnerable, how we are not able to identify the accounts that are related to terrorist financing or money laundering. Okay, so these kind of risk and vulnerabilities will be identified, will be assessed. Okay, so this is the idea. Next few points are identification of red flag indicators for suspicious transactions, so that there is a proactive approach that is taken rather than reactive. It's not like that after an event has happened, only after that we will react. No, a proactive approach is required, and that's why it is said that we will start identifying the red flag indicators for the suspicious transactions, so that before the whole, what happens usually in India, or what happens usually is that once the crime has happened, after that the investigation happens, and after that when the person has ran away with the money, then it is identified that okay, this person has had made a mistake and the crime has happened. So this is usually the reactive approach, that once the crime has happened, after that the investigation happens. But now it is said that FIU India and the Reserve Bank of India, they are cooperating, so that the red flags can be identified. The red flags can be identified in a proactive manner, so that the problems can be resolved and the criminal can be caught. Okay, so this is the idea. Next is supervising and monitoring the compliance of reporting entities. Now, reporting entities, they have to be very prudent, they have to be very efficient. It's not like that they are becoming relaxed, or they are becoming, they are not focusing on completing the process or going through the rules and regulation. Okay, if the reporting entities become inefficient, or if the reporting entities become relaxed, or they do not follow the rules and regulation, you can understand many of the accounts will not be identified that are actually doing the money laundering or terrorist financing. So it is said that it is required to supervise and monitor the compliance of reporting entities. The regulated entities like banks and BFCs, they have to be monitored and supervised that they are complying with the rules and regulations, or not. Okay, with their obligation under the Prevention of Money Laundering Act and the Prevention of Money Laundering Rules and RBI instructions. Okay, so it has to be the supervision and monitoring has to be very prudent, so that the reporting entities or the regulated entities, they comply with the rules and regulations set by the RBI or set by the Prevention of Money Laundering Act. Okay, compliance with the relevant international standards. So the rules and regulations that is present in India for prevention of money laundering or for the combating of the terrorist financing, so these rules and regulations should be meeting the international standards, and these rules and regulations that are set in India should be very, very prudent. Okay, conduct of quarterly meetings. So quarterly meeting will happen between FIU India and the RBI to discuss and share information on issues of mutual interest. So this is regarding the MOU between the FIU India and the RBI and the steps that they will be taking through this MOU. So I hope this is clear. This was the first news article. Any confusion in this, anyone? No, this is the Indian step that is taken by FIU India and the RBI. That's it. Okay. Any confusion here? Now coming to the second news article, NaBFID, that is one of the All India Financial Institution. How many All India Financial Institutions do India have? Can you tell me? How many All India Financial Institutions do we have? Yes, very good, very good. So we have five All India Financial Institution. Okay. See, FIU comes under FATF. So FATF, it is the Financial Action Task Force. Okay, it is present at this is like the international standard. So FIU is the Indian, like FIU is the Financial Intelligence, FIU India. So FIU Financial Intelligence Units, they are present all over the world. So that's why it is written FIU India. Okay, this is the Financial Intelligence Unit of India. Okay, yes, it also like FATF, it is the international standards. Okay, so FIU India also follows the international standards, but it is particularly for India. I hope this is clear now. Yes. So FATF, this is the Financial Action Task Force. That is an intergovernmental body. That is an international body, we can say, where which set the international standards. Which set the international standards for the financial action. Okay. Now FIU, financial intelligence units are present in different countries, and here the FIU India we are talking about. That means FIU. The Financial Intelligence Unit of India, particularly, but it works according to the international standards with a little touch of India, okay, or the Indian rules. I hope this is clear. Now coming to the NaBFID. So NaBFID is one of the five. It is one of the five All India financial institutions that are major All India financial institutions in our country. So we have five All India financial institutions: NABARD, NaBFID, EXIM, NHB, and we have SIDB. Okay, so SIDB, basically SIDB, it is for the small industries. Okay, it is for the small industries. Then we have NABARD, it is for the rural development and for the agriculture and the rural development. We have NHB, this is for the housing, for the development of housing sector in our country. We have NaBFID, that is for the development of infrastructure sector in our country. Okay, we have the EXIM, that is for the development of export and import in our country. Okay, or for the export and import. So SIDBI is Small Industries Development Bank of India. NABARD is for the agriculture and rural development. Then we have National Housing Board. Then we have NaBFID and the EXIM, that is the Export and Import Bank of India. Okay, so this is the idea. We have major five All India financial institutions, out of which NaBFID is one of them, and it is for the infrastructure sector. It is for the infrastructure sector. So NaBFID is your national bank. It is the national bank for financing infrastructure and development in the country. Now the NaBFID has signed a MOU, the Memorandum of Understanding, with the new development bank that was established by the BRICS. Okay. Now BRICS is a group of countries, that is the fastest developing countries or the fastest emerging economies. So BRICS refers to Brazil, uh, Russia, India, China, and South Africa. Okay, so when the BRICS was established, when the initially BRIC was established, that means the group was established that was consisting of Brazil, Russia, India, and China. Later on, after just a few months, the South Africa also joined, and that's why it came to be known as BRICS. Okay, so NaBFID, that is the National Bank for Financing Infrastructure and Development, that is the All India Financial Institution. It has signed a MOU, Memorandum of Understanding, with the new development bank, creating a deep and sustainable infrastructure financing market. Okay, now new development bank, we will understand about it more, but basically the BRICS, that is the Brazil, Russia, India, China, South Africa, this block or this group created the or established the New Development Bank. Now, New Development Bank was established with the main focus that it will help or it will finance the sustainable development projects, and it will finance the infrastructure projects. It will finance the sustainable development projects and infrastructure projects not only in the BRICS countries but also in the other emerging markets or the emerging countries. Okay, so basically BRICS countries, they came together, they are a bloc and they are a group, and they created or they established the New Development Bank that will help in the financing or that will finance the sustainable development projects or infrastructure projects in the BRICS countries, that is for Brazil, Russia, India, China, South Africa, as well for the other emerging markets or the developing countries also. Okay, so this is the idea. So now let's understand about the BRICS briefly. So the term BRICS originally denoted a collection of countries experiencing the rapid economic growth. So the fastest of the growing economies or emerging economies were the part of BRICS. So BRICS initially was the BRIC, that is initially Brazil, China, Russia and India. So Brazil, Russia, India and China, they were part of the group. Then South Africa also joined, and recently at the 2023 BRICS summit in South Africa, BRICS announced the admission of Saudi Arabia. So invitation was sent to Saudi Arabia, Iran, UAE, Egypt, Ethiopia and Argentina to join the BRICS because they are also growing faster, and BRICS can help these countries also. Okay, soon after Javier Milei became the president, Argentina rejected the invitation to join the BRICS, and Saudi Arabia has not formally joined the BRICS. So right now, Egypt, Ethiopia, Iran, and UAE, they agreed to join the BRICS. Okay. Later on, Indonesia also joined the BRICS. Okay. So initially, Brazil, Russia, China, and India, they were the part of BRICS. Then South Africa also joined, and now recently Egypt, Ethiopia, Iran, and UAE has also joined. And then lastly, the 10th member, Indonesia, has become the 10th member, or the entity that joined last was Indonesia. So Indonesia joined the bloc as a full member on January 6, 2025. So most recent joinee of the BRICS nations or BRICS group is Indonesia. So now we can say it is BRICS plus. So BRICS are the main countries. So it was initially BRIC, Brazil, Russia, India, China. Then South Africa also joined in a few months only. So then now Iran, Ethiopia, Egypt, UAE also joined, and lastly Indonesia have also joined. Okay, so in total there are 10 members of the BRICS now, or the BRICS group. So now this is the idea. Now coming to the NDB. Any confusion? Anyone? See, the All India Financial Institutions, they are only 5. The development financial institution, so any financial institution that is working for the development of a particular sector can be the development financial institution. And in our country there are various development financial institutions, but all India financial institutions, the major all India financial institutions are the 5 that I have told you. Okay, so this is the idea. Now coming to NDB. NDB is the New Development Bank. It is a multilateral development bank established by BRICS, or the BRICS group, that is Brazil, Russia, India, China and South Africa, established the New Development Bank. Now, why the New Development Bank is established? It is majorly established to mobilize the resources, to collect the resources, so that the NDB can finance for the sustainable development projects or for the infrastructure projects in the emerging markets and developing countries, including the BRICS countries. Okay, so NDB, it is the multilateral development bank established by the BRICS group, with the purpose of collecting the resources, mobilizing the resources, and then using these resources to finance the sustainable development projects and infrastructure projects in the emerging market and developing countries. Okay, so now the NDB and the NaBFID. So NaBFID is the one of the all India financial institution of our country that is focusing on infrastructure. NDB is a multilateral development bank that focuses on infrastructure projects and sustainable development projects. So these institutions have done a MOU. So this collaboration will help bridge the infrastructure financing gap that is present in India. So the financing gap, or the resource gap, or the money gap that is present in the infrastructure sector, that the infrastructure sector does not have sufficient money in our country. So this will be financed by the NaBFID jointly with the NDB. Okay, so they have signed a MOU to bridge the infrastructure financing gap in our country, and this will facilitate joint infrastructure investment in India by NaBFID and NDB and create a framework for exchange of technical knowledge between these two institutions. Because NaBFID is also for the development of infrastructure, NDB is also working in the infrastructure projects area and in the sustainable development projects area. So if they both come together, they will be sharing the technical knowledge. So how the infrastructure financing can improve. Okay. NaBFID aims to work with NDB on clean energy, that is renewable energy projects, transportation projects such as renewable energy initiatives, sustainable water and sewage management, among others. So these are the focus areas right now. Now the MOU also lays the foundation for both organizations to participate in infrastructure projects through thematic level collaboration. So as we have discussed in the previous session, there are the thematic cohorts. Thematic cohorts means that on a particular theme, the innovations are developed. So similarly, thematic level collaboration means that in particular areas or in particular infrastructural areas, the development will happen. Like the clean energy is one of the chosen area. The sustainable water and sewage management is a chosen area. So thematic level collaborations is happening that in particular areas of infrastructure, the focus is given within their respective mandates. So here the focus, NaBFID and NDB, they are focusing on the clean energy, transportation projects and the sustainable water and sewage management and such projects. So thematic level collaboration is happening. That means in particular infrastructure themes, the development will happen. Okay. Additionally, it is said that NaBFID and NDB will partner in research and capacity building initiatives, that how further improvement can happen, that how further the infrastructure that is being developed can be made disaster resilient, or the how further the financing can improve in certain areas of infrastructure in the renewable energy projects, in the different initiatives, in the different infrastructural projects, how the financing can improve, including seminars and workshops to promote knowledge sharing between NDB and NaBFID workers and enhance the institutional capabilities of both these institutions. I hope this is clear. Any confusion here, anyone? So NDB has approved nearly USD 10 billion in loans for 28 major infrastructure projects in India, including the Chennai, Indore, Mumbai metro systems, the Delhi, Ghaziabad, Meerut regional rapid transit system, and the Namo Bharat high-speed trains. Additionally, this funding supports the development of urban and rural roads, bridges and highways, water and sanitation, clean energy, and USD 2 billion for COVID-19 emergency aid and economic recovery. So this was the NDB has helped India in this way. Okay, so previously this was approved. These were approved previously. So you can understand that NDB has helped in India in various means, and now the NaBFID and NDB has collaborated, or they have signed a MOU so that the infrastructure development can happen. I hope this is very much clear. Any confusion anyone has in this? We are going forward with the last news article for today. Any confusion in this one? Okay, so the last news article is SEBI, that is the Securities and Exchange Board of India, eases FPI's disclosure norms, doubles asset threshold to 50,000 crore. So basically what has happened, that there are the disclosure norms that have been eased. So there is the easing of the disclosure norms that is happening. First of all, why it is happening? Why the disclosure norms, or why the norms, why the rules are being relaxed? What is the requirement of relaxation? So first of all, cash equity market trading volumes. So there is the future market, future equity market. Anyone knows about the future equity market? See, future equity market, this is the market for the future. Like let's say that you want to buy the shares not right now, but after 3 months. So you are coming into a future contract. You are coming into a future contract that after 3 months I will buy the shares. Let's say that you want to buy the share right now. You are buying the shares. You want to buy the shares of Tata Motors. You are buying the shares of Reliance or Geo Financial entity or such. So you want to buy the shares right now. So the shares that you are buying on the immediate basis, this is the shares that you are buying in the cash equity market. Okay, that is the cash equity market where the shares are bought for the immediate purpose. Okay, of immediately you are buying the shares, selling the shares on the immediate basis. So this is the cash equity market. Now the shares that you want to buy after 3 months or after 6 months or after 2 months, so this is the future equity market. This is the future equity market where you want to buy or sell the shares in the future on a future date. Okay, so cash equity markets trading volumes. So the cash equity market, or the shares that are sold in the cash market, in the immediate market. So trading volumes have more than doubled between financial year 2022-23 to 2024-25. You can understand that within 2 financial years there is the doubling. There is the cash equity market trading volume have more than doubled between financial year 2022-23 to financial year 2024-25. So this shows that strong investor activity is happening in India, and slowly the cash equity market is maturing as more and more trading volume is flowing, and more and more trades that are happening in the country. So this shows a more liquid and deeper market in the cash equity market segment. This can better absorb the larger investments without disproportionate influence, because more people are getting involved in the equity trading. More money is getting involved in the equity trading. So now there is more liquidity and deeper cash equity market. This can better absorb the large investments without disproportionate influence, which reduces the systemic risk posed by the large FPIs. Okay, so I hope first of all this is clear, that there is the cash equity market where the shares are sold on the immediate basis, that you are selling it today and you are buying the shares today. So that is the cash equity market. If you want to sell, or if you want to buy if you want to buy or sell the shares after 2 months, after 3 months, so that is the future market. Okay, so in the cash equity market, the trading volumes have more than doubled between financial year 2022-23 to financial year 2024-25. This higher trading volumes show that there is strong investor activity and maturing market. There is a more liquid and deeper market that can better absorb the large investments without disproportionate influence by the large FPIs. So this is the idea. So it has been seen that the cash equity market is developing, and to further boost the cash equity market, it is said that we are easing the disclosure norms for the foreign portfolio investors. Okay, so SEBI has doubled the threshold for mandatory granular disclosure of beneficial ownership by FPIs from 25,000 crores to 50,000 crores. So what has happened, that before, if a foreign portfolio investor group, or if a foreign portfolio investor category is, let's say, investing more than 25,000 crores, so the granular disclosure need to happen. Granular disclosure means that at the deepest level the disclosure has to happen, that who has the control of the shares, who is getting the ownership of the shares, what is the name of that person, what is the name of that entity. So the granular disclosure had to happen, that which shares, how many shares, for which company the shares are going to which person, who is getting the ownership, who is getting the beneficial ownership, who is getting the rights and such. Okay, so before the granular disclosure, or the most deepest level of disclosure, mandatory granular disclosures need to happen for the foreign portfolio investors that were investing more than 25,000 crores as a group or in such. Okay, now it is said, individually or as a group, now it is said that there is the relaxation that is provided, that if the FPI is investing more than 50,000 crores, then there is the requirement for the granular disclosure, that is the deepest or the full level of disclosure need to happen, that how many shares is owned by which particular person or which particular entity. So that kind of disclosures need to happen if the FPI is investing more than 50,000 crores. So this is the idea, that FPIs individually or as an investor group, if they are holding more than 50,000 crores of equity under their asset under management, are now required to disclose detailed information, the deepest level of information about all entities holding any ownership, even the slightest of the ownership. So that has to be disclosed. Economic interest or exercising control on a full look through basis, that means on a complete look through basis, or complete disclosure needs to happen, that who is getting the ownership, how much ownership the person is getting, how much control the person is getting or the entity is getting. So this is the idea, that the disclosure norms have been eased. Basically, before, if the FPIs were investing individually or investor group, if they were investing more than 25,000 crores, then it is mandated that granular disclosure needed to happen. But now the limit has been doubled, that if the FPIs individually or as an investor group, if they are holding more than 50,000 crores of the equity under the asset under management, then they need to do the disclosures even at the deepest of the level. And remember this, that the FPIs will have to make the disclosure, but now the limit has been doubled. Any confusion here, anyone? Any confusion in this one? This is clear? Is this point clear? Shall we move ahead? So certain FPIs, including a broad-based pool structure. See, FPIs, the foreign portfolio investors, let's say the foreign mutual funds, they are investing in India, or foreign insurance companies, they are investing in India on their behalf or on the behalf of their clients. Okay, or let's say there are the like asset management companies, of the foreign asset management companies that are investing in India. So foreign portfolio investors also include the mutual funds, the investment companies, the asset management companies that are investing on behalf of their clients. Okay, so now it is said that certain FPIs, certain foreign portfolio investors that are including a broad based pooled structure, that means pooling has happened in the FPI, and a lot of people have pooled in their money in this FPI, in this foreign portfolio investment, to invest in Indian securities, to invest in Indian shares. So in this case, that if they have the broad based pooled structure and diversified investor base, where the control is not in the hands of only a few people. Like in the mutual funds, there are a lot of people that invest. In Indian mutual funds, there are a lot of Indians that are investing, or a lot of investors that are investing, right? The small retail investors are investing, lakhs of investors are investing in a particular mutual fund. Similarly, in the foreign mutual fund, let's say it is having a broad based and pooled structure, that is having diversified investor base. So there are certain FPIs that will be exempted from the requirement of the disclosure norms if they are following some certain conditions. They are broad based, they have pool structure, diversified investor base, as well as let's say they are following some specific conditions, then they can be exempted from the requirement of the disclosures. Okay, from the requirement of the granular disclosures. Similarly, the government or the government related investors, the government itself, let's say a foreign government, or the foreign government related investors, they are investing in the like they are the foreign government or foreign government related investors, they are doing the foreign portfolio investment in India, in the Indian shares. So they might also be exempted from the disclosure requirement subject to specific conditions. So I hope you know that who are exempted: the FPIs, foreign portfolio investments or foreign portfolio investors that are broad based, pooled structure, diversified investors, or the government or government related investors. They are exempted from this requirement of disclosure if they are following some certain conditions. Okay, so basically what two rules have been changed? What are the exceptions? They will be exempted from the disclosure requirement. They will not have to do the granular disclosures basically. So see, before the granular disclosure, that means the deepest level of disclosure needs to happen, that who has the ownership, who has the control, or who has any kind of right. Okay, if the foreign portfolio investors, they were investing, if the foreign portfolio investors, they were investing in India, in the Indian equity market, in the Indian shares. So if they were having more than 25,000 crores of sh- uh, worth of shares or equity under their asset under management, they needed to have the mandatory granular disclosures of, even let's say, uh, even a individual even a individual or even any entity is investing through the foreign portfolio investment, so the granular disclosures need to happen. But now it has been said that if the investment that is done by the foreign portfolio investment is 50,000, is more than 50,000 crores in the equity under their asset under management. That means if the foreign portfolio investors have the investment in the Indian equity of more than 50,000 crores, this is under their asset under management, then they need to do the disclosures. Then they need to do the granular disclosures, that who uh, has the ownership, or who is holding any ownership in the Indian companies, in the Indian shares, who has the economic interest, or who is controlling, who is having the control. So on full look through basis, but there is the exemption that is also provided. I hope this is clear. Granular disclosure means the disclosure about the person who owns the shares, in the foreign portfolio investment, if the foreign portfolio investment that is happening in India, foreign investors, they are investing in India. Okay. So now granular disclosure means that who are these foreign investors that are investing in India in the Indian shares, in the Indian equity market? Who are they that are investing in the Indian equity market? Now, should we go after each? Let's say someone is investing $100, someone is investing $10. Should we go after them also? No. The SEBI is saying that we will ask the granular disclosure. We will ask the foreign portfolio investors to do the disclosure about the ownership, that who owns, how much it is owned, and who is having the control for the foreign portfolio investors that are having individually or as an investor group, if they have more than 50,000 crore of the asset under management in the equity segment of India, in the share segment of India. Got it? So foreign portfolio investors individually or as a group, if they are investing in India of more than 50,000 crores in the Indian shares, then they will have to do the granular disclosure. That means they will have to tell each and everything, that how much shares they own, for which companies the shares they own, who owns the company, John, Amanda, Smith, from which country, okay, which person, from where they belong, everything has to be disclosed. Okay, that who owns, who has the ownership basically. Okay. Now, the exemption also we have discussed. In 2023, SEBI had directed the foreign portfolio investors who were holding 50% of their equity asset under management in a single corporate group or with an overall holding in Indian equity markets of more than 25,000 crores. So basically, foreign portfolio investors, it was said that if you have more than 25,000 crores of the investment in the shares in India, then you will have to do the granular disclosure. That means you will have to disclose the basic, most detailed details information you will have to disclose of all the entities that are holding the shares, or all the individuals also that are holding the shares, that are having any ownership right, that are having any, so foreign investors or the foreign people that are having any rights in the Indian shares, you will have to disclose the information about them. Okay. Now it has been said that in 2025, now it has been said that the limit has been increased to 50,000 crores. So the foreign portfolio investors, they will have to provide the complete information about the investors, the foreign investors that are investing in the equity market in India, if the foreign portfolio investor has asset under management in the shares of more than 50,000 crore. Got it? Yes. The see for the big FPIs, for the big FPIs, it is required that they disclose, so that a single entity, what happens now, that let's say it is said that okay, XYZ, a single person is starting to hold a lot of shares in a particular company, a lot of shares in a particular company ABC. So this should not happen, right? So it is said that if FPI, there are the limits that how much the FPIs or how much a foreign investor can invest in a particular company, right? So it is said that you will have to disclose your investment, so that it is seen that who is investing and how the investment is happening, from where the investment is coming. So yes, the money laundering do not happen, and the control is not going in the hands of a few only. Okay, so this is the idea. Is it correct? Is it understood? So this is the idea. Now the three articles we have discussed, I will give you the questions, that what kind of questions can come from these three articles. So first of all, this is the Perspective 360-degree series that is taken by Jaskaran sir on Monday, Wednesday and Friday at 5 p.m. If you want to do the answer writing practice, or you want to know the art of writing the answer, then this series is for you, so that you can do the answer writing practice. Jaskaran sir also gives a homework question, and the answer you can write in the comment section below of the Perspective 360 videos that is evaluated free of cost by the evaluating team. Okay, so now this is the first question. I hope you will be easily able to answer this question. This is the first question. Do try to answer this question. You have to tell the correct statement. Okay, now this is the second question. Very easy one liner question. This kind of question can come in phase 1, as well as this kind of question can also come in phase 2. Okay, now this is the third question. Do try to answer the question, and the question consists of two parts, so do see that both the parts should be correct. Okay, So this is it for today. Do give me the right answer of the homework questions. There are 3 homework questions. Do give me the right answers, and I hope you like the session. If you are preparing for RBI Grade A or if you are preparing for RBI Grade B, then basically you have to focus on the finance current affairs that are affecting the whole of the country. Like in 2023, a question came on ONDC. Okay, so usually the descriptive questions, they come in the finance current affairs. The question come on the topics that are affecting the whole of the country, or the questions also come from RBI press releases, RBI notifications, RBI reports, and such. Okay, so this is the idea. So I hope this is clear now. So thank you everyone. Thank you for joining.